interest rates tipped to hold at 1.5%. The RBA board is expected to keep interest rates on hold when it meets today, but experts predict out-of-cycle rate hikes will reappear in 2017. Comparison website Finder.com.au recently surveyed 35 leading Australian economists and experts, with every expert predicting a rate hold at 1.5% for December. More than one-quarter of the experts surveyed, 26%, forecast upward movement in 2017, with most expecting the rise to take place after June. Two of the experts, Mortgage Choice's Jessica Darnborough and the University of Queensland's Clement Allen Tisdale, have both tipped a rise from as early as March. Finder.com.au Insights manager Graham Cook said customers should continue to review their mortgages. Homeowners are unlikely to receive a Christmas bonus from the Reserve Bank this month, as all indicators point to a rate hold, Mr. Cook said. However, it's likely rates may begin to head north next year, so customers should decide on their risk strategy. That is, whether they'd like to opt for a fixed or split rate to leverage current low rates. Mr. Cook said, while banks have traditionally closely followed the Reserve Bank cash rate when adjusting lending rates, he predicts we may see banks lifting rates independently in 2017. This unusually low-interest environment has broken the mold in terms of rate changes, and with the stagnant nature of monetary policy over the past 12 months, banks are taking the reins themselves and hiking rates, Mr. Cook said. Now could be a good time to lock in a fixed rate on your mortgage so you can keep your repayments to a minimum. However, be aware that this means you won't benefit should rates begin to fall lower than your secured rate. Mr. Cook said the number of people using the website to search for fixed-rate home loans had surged by 163% as people seek to lock in competitive rates. According to the research, 52%, 14, of those surveyed predicted at least one rate cut next year, with 4 experts predicting a cut in February. More than 20%, 22%, 7, expect the rate to drop to 1% or lower before it rises. Almost 90%, 86%, of those surveyed said out-of-cycle rate cuts would continue into 2017.